If you have been listening to and watching my reviews carefully, you should have noticed 3 important things that are still relevant today and have served you well. First, I recommended refraining from making purchases on the stock market. I said that the S&P 500 index is significantly overbought and the risks of a decline are enormous. Well, after all, it's at its historical highs. And who buys at the peak? Well, only greedy people. Or there's another category, those who are very well informed. That can happen too. Second, I recommended refraining from buying cryptocurrency and even locking in profits on long positions in Bitcoin and altcoins because $67,000 is a kind of threshold, and it's not certain that Bitcoin would go any higher. There could have been a correction or even a global reversal. Today, we will be analyzing Bitcoin specifically. And finally, the third point, which is still relevant today. I do all my reviews on the Quant Fury platform. Here, there are absolutely zero commissions, zero fees for opening, closing, or holding positions. You don't pay anything at all, and this shifts the mathematical expectation of your trading towards success. Even if you are a super genius trader, the smartest in the world, commissions still eat away a portion of your profits. Of course, you can tell me that you make tens, hundreds, or thousands of % in profits. But you see, if you can walk on a clean road yet you choose to walk on a dirty one, well, that's entirely your choice. There's nothing you can do about that. You can argue whatever you want, because maybe that road seems moist to you, while the clean one is too dry. Alright, now we'll start the Bitcoin review with the S&P 500 index chart. These are the E-mini futures. And here we have daily candles. Take note, once again, we haven't updated the all-time high. Specifically, the index didn't update its high, but we did consolidate below the 50-day moving average, then made a false breakout here on July 21st, breaking through this average from below, and then moved down with a bearish engulfing pattern, all from that same green candle on July 21st. What does this tell us? This means that if this support, the blue level at 7,436 points, doesn't hold, then a further decline is likely toward the area of 7,338 points and potentially even lower, down to the 100-day moving average around 7,300 or even 7,270 to 7,280. Of course, the S&P 500 index and the entire stock market could continue to move sideways. It could remain in a range for many weeks or even many months. But even at current levels, I recommend refraining from making purchases. This absolutely does not mean that you should open short positions, but you should refrain from those as well. And let me also remind you that the stock market is a market of financial instruments that are less risky compared to cryptocurrencies. This means that pressure from the stock market, its potential downward trend, puts significant pressure on riskier financial instruments, which include Bitcoin and all other cryptocurrencies. Now, what are we going to look at next? Well, let's take a look at the Tesla chart. Even though this is a Bitcoin review, well, why not take a look at it? It's just that its ticker is TSLA. Yes, here you go. Tesla, the company. Take a look at this beautiful downward movement. The downward movement started for us, well, around July 2nd, from the beginning of the month at the level of $432, and it dropped down to $316. Now let's see how much that is in percentage terms. Well, let's measure from the maximum roughly down to the minimum. So the stock lost a quarter of its value, specifically 27%, actually even more than that. Accordingly, for Tesla to return to its previous levels from where it is now, even just to the intermediate highs, it would need to grow by 35%. Moreover, we understand the competition between Tesla and Chinese automakers. Although Tesla is not limited to just manufacturing cars or electric vehicles. But let's remember, today we're looking at Bitcoin. And let's quickly but thoroughly take a look at the situation with Bitcoin. We entered BTC USDT. Let's open the Bitcoin chart. And what do we see? First of all, we see that the level of $66,328, I mentioned 67, but 66,328 was also, in a sense, a defining level. I said that if we break through it on the daily candles, that's a signal for continued growth. But breakouts are often false. That's exactly what happened in this case. There was a pullback. No one is forcing you to buy right at the breakout of the level, right? That is, you should look for some kind of corrective pattern at the base of the candle or in the middle of the candle. There you should look for a bullish engulfing pattern on the hourly or 4-hour candles. And only after a repeated consolidation above the key level, which in our case is 66,328, and against the backdrop of a bullish engulfing pattern on the 4-hour or 1-hour chart, do you have the right to open your position with a stop loss. Not at the closing point of the daily candle, because that could be a false breakout, but after a correction to the middle of the candle or its base, right? And it is in these areas that you look for a bullish engulfing pattern. Most likely this did not happen, but you can see that the opposite occurred. On the daily candles, we engulfed the bullish candle, which means that by all formal indicators, the market has now reversed downward. And what is its key support level for the decline? It's very easy to determine. It's the level where the previous reversal occurred, right? Some defining point. I would highlight this level based on my experience, although there could be several options here. For example, this level, $64,298. That's the first level, and the second level is accordingly $62,290. So the distance between them is $2,000. Accordingly, we can see three possible scenarios. The first scenario is like this. The second scenario is like this. And the third scenario is like this. Well, it doesn't necessarily have to be linear, right? So something like this. Accordingly, right now there are no purchases and there can't be any. Plus, pay attention to another thing. We have another very, very important level that, well, basically attracts us like a magnet. Now we'll highlight it in white and bold. $63,200. That's the 50-day moving average. That's quite logical. Why? Because, look, we haven't touched it for a very long time, and the last time we did it was from above going down on May 26th. After that, we approached it again. We basically broke through it right away. In other words, we didn't have a pullback after the first deep breakout attempt. We just moved along this line and then went up. Accordingly, at the very least, a return to around $63,200 given this bearish engulfing seems likely. But what happens next is the question. And after that, again, there could be three scenarios. Therefore, I would probably consider not a return to 64,290, but rather a return to the area of 63,200 to 62,300, so somewhere around here. And then there are three possible scenarios. Scenario number one, we go into a deeper correction down to around $58,000. But in this case, most likely, the market will already turn around even on the weekly candles, and right now on the weekly chart, it is looking upward. The second scenario, we bounce directly off the 50-day and go to test this dashed line of the global trend. It is drawn based on the monthly candles, and it's around $70,500 approximately. And right there, we also have the 100-day and 200-day moving averages for Bitcoin. And finally, we have the option of dropping to around $62,000 and once again getting a bounce to where? Well, to the same place, to the area of $70,000. A whole lot will depend on the stock market. That is, if the stock market continues to decline, then with high probability the cryptocurrency market will also tumble. But if the stock market now bounces off the level I showed you today, then, well, the cryptocurrency market might just play around there, stay in a sideways trend, right? Most likely, from the current levels, we will head toward the area of 63,000. But, an important point, we always work with probabilities. If we see that, even from the current levels, maybe a bit lower, maybe a bit higher, but if a daily candle closes above 66,328, that will be a very strong signal for an immediate move upward toward the 70,000 area. So it will look like this. Look, we broke through. Wait, I drew it wrong. We broke upward with a close above an important resistance level, then dropped back down with a close triggering stop losses, and then the next breakout, maybe not exactly like that, but something really powerful, right? Well, it doesn't have to be straight to 70 or 72, but it would be noticeably more dynamic than what we've seen here. Somewhere in the area of, for example, 68 to 69,000. So right now, the level of 66,328 is a signal level for us in terms of going long. That is, the close of any daily candle above this level is a long, but at the moment, the priority is downward. And when we come to the area of 63,200 to 62,300, we will also be looking for entry points for a long there. Why? Because we switch to weekly candles and remove absolutely all the markings. No, although we will partially bring them back. Pay attention, I told you that we broke straight through the 50-week, then the 100-week, and then we were breaking through the 200-week, right? And now a retest upwards of the 50-week is expected. Here I drew a wavy line showing that it is dropping somewhere towards the dashed line, the global trend line. That's around 72,000. And during this time, the price will also move up. And this doesn't contradict, but rather even confirms the trend of the daily candles, where our highs are rising. Sorry, the highs are increasing. I'm showing the lows, but I'm talking about the highs. The lows are rising, the highs are rising, and the candle bodies at the closing point are also rising. So this points in favor of growth. But in order to talk about a full-fledged move further upward, we need to see the weekly candle close above the level. Here, I moved the white line, $65,746. Yes, I wanted to make this video 2 or 3 minutes long, but I made it much more detailed, higher quality, and in my opinion, more understandable. Given that each weekly candle closes in green with a higher high and a higher low, all of this is happening above the 200-week moving average, which we had previously dropped below. And with a potential direction toward retesting the 50-week moving average, which we last tested who knows when on November 10th, 2025, the chances of moving up somewhere here to even the base of the candle from June 1st, which is $73,500, do exist. But right now it's not the time to buy. And let's also keep a close eye on the stock market, which I'll review in the near future. Subscribe to the channel, check out the Quant Fury platform. Install the app from the Apple Store or Google Play, or visit the website tradingquantfury.com. 0 commissions, 0 fees, and you'll be in my company. Goodbye.